Hey there, I'm Lauren Pearl and I am a fractional CFO and I work with a lot of startups and early stage founders. So I want to start a new thing this week. I've been working a lot with startups in courses and in consulting, and I noticed that early on, one big need startups have is to build a financial model, right? You have to do kind of the math to make sure your business is actually going to work. But a lot of times founders are not necessarily good modelers. And so the way they'll solve this problem is they'll either hire someone to build them a model if they can afford it, or they'll go find like a template on the internet. A lot of people can't afford someone else to build the model, and also if you do that, you don't really learn anything. So let's focus on the internet thing. If you go and look on the internet for a model and then you plug in all of your inputs of your company, it might not work out for you, and often it doesn't, because if you don't understand what's going on in the model, and you put in all your inputs, chances are the outputs will be garbage because all startups are unique. Sometimes models get complicated. Maybe there's a mistake in the model. There's a number of reasons this doesn't work out for founders. So to solve this problem, I am going to be doing a series of videos where I go find models on the internet that you might want to use as a template, ones that I think have really great elements in them. And I'm going to walk through them and explain to you as a professional modeler how I read that model. Like I'll talk you through what's going on in kind of each piece, and then I'll point out different stuff in each model that's really good, that I think would be very smart to pull or borrow from and take ideas from for your own startup. And I'll also point out potential pitfalls, maybe mistakes I see, places where it might work great for this startup but might be challenging for you, other things you want to watch out for if you're borrowing from this model. So without further ado, I'm just going to start on the first model. Let's go take a look. So the first model that we will review is the SaaS Financial Projections Template by Melissa Kwan. So Melissa is the founder of a company called eWebinar. She is amazing. She is a 3-time founder, and she's also been very generous with sharing her entrepreneurial journey and all of the resources and templates that she's used for the past companies that she's founded. So eWebinar is a bootstrap startup that automates onboarding and training sessions to save you from webinar hell. So if your startup uses webinars for training and onboarding, you should definitely check out this company. I'll provide a link in the notes or something. This is my first video. I don't really know how that works, but I'll share them details on how you can check out eWebinar if you want to. But back to the model. So this model that Melissa shared, it's got some different pieces to it. It's got the first sheet, which is a README of how the model works. The next sheet is a revenue projection describing how the company's going to make money. Next, we've got a cost tab that contemplates the different costs the company will incur. And finally, a summary where you can see kind of the whole picture of what is potentially going to happen in this startup. So taking a peek first at the README. So first kind of rule of the road for templates is if a template comes with a README, you should definitely read it. It's here for you so that you can be thoughtful about how to use this template. What's great about this README is that it has tons of background context. So it tells you who the creator is, the fact that she's a founder. We love that, right? She's not trying to sell you anything. She's just trying to share what works for her, which is a sign that this could be a really good model. She used it with investors. So if that's something that you're looking to do, that's like a great data point. Like, oh, this has worked in the past. That's a good clue. It could work for you too. This README also tells you how to use it. She's got some instructions here of how to go about it. I also love that she tells you how, like, what's the point of this model? Well, if you have any of these questions, this is a good model for you to use. And I love that she's also been generous enough to share how to get in contact with her. If you have any questions about the model or you're struggling, you can reach out to her directly. So all of those things about the README are really, really good. I have nothing wrong to say about this tab. It's perfect. Next, let's check out the revenue tab in Melissa's model. So first, just kind of an overview to walk through how it works. We have a breakdown of revenue in terms of different kind of plans. This is a SaaS company, and so you might have different kind of pricing tiers with different levels of service that you offer as a startup. And so it has like 4 of these for hers. For each of these plans, we have different places to contemplate the number of subscribers each month, the growth rate, their subscription subscription price and then the resulting revenue. And at the bottom, we actually have a final calculation, which is one of churn. So churn is a percentage that describes how many customers leave you, right? Sometimes we make this mistake as a startup thinking that when we gain a customer, we're always going to have them. But that's not true. And actually churn can come really into play as we scale. So that's kind of contemplated at the end. So let's talk through what I love when I read this tab, about this tab in this model. One, I love that it is super simple and user-friendly. There's no complicated formulas in here, multiplication, addition. It's really clean and easy to read. So I'm not getting confused at all about how I'm creating my projections for revenue. I love also here, this is cool. There's a little cell for date of when this was last updated. This is really subtle, but it's really powerful in a model to have it kind of down on paper, so to speak, like when you last updated this whole thing, because models, financial models are only as accurate's the wrong word, but like the quality of the prediction you're making is as accurate as you can get the data at a point in time. And you're always getting better data as you build a startup. So you want to know kind of when you made this guess, because if you made it recently, it's more likely to be high quality. And if it was a really long time ago, it might not be as good. So I love that she has that cell. I also really like that each of these subscription types, you'll notice they each have their own growth rate. And I think that's great because realistically, if you've got a bunch of plans as a SaaS startup, they won't all grow at the same rate. And like customers will switch from one to the other. Often that lowest cost plan will really grow like quickly, and the higher cost ones will grow more slowly. So I like that that's independent the way that she's laid that out. I also love, I kind of alluded to this before, but the fact that there's churn in here. Again, so often we forget about this, and it's really important for your startup to consider churn. It's not enough to just like have the rate be slower to account for those customers that are dropping off. You really do need to consider it as its own metric. It's also a metric that a lot of peers or investors or other folks in the business, they'll have really good opinions on what your churn should be for a different stage, for a different industry. So it's great to keep in there as an input because you can get information about it, which serves to make your model potentially better and better as you do more research and you speak with more experts. Some of the things that I really love, I'm sure I could find more if I kept looking, but here are a couple things that I noticed that you might want to watch out for if you use this model for your own startup. First one, I will say, and this is a bit true of many models, formatting. So it's very clean, it's very clear. But as a professional modeler, one thing I really like to do with my models is I like to make cells that have different kinds of data in them, uniformly a different color. What does that mean? So in my models, if I have a cell where the value in that cell is something I've typed in, that's a static input and I color it blue. And if I have a place in my model where it's a formula like this one, where it's B6 times B8, that one I keep black because formulas are dynamic cells, right? Okay, so final little tweak that I might think about for this model is that we're using a lot like multiple entries, the same static inputs, and we could make that simpler and make the model easier to update if we leveraged some dynamic ways of calculating things. So the best example for this would be the price of each of these plans. So for each of these plans, we have this like set price, and it's sometimes helpful to have kind of different prices set for each month if you're, planning on making updates to those subscriptions. But in this model, we have this static input over and over again. So for $100 a month plan, we have 100, 100, 100, 100, 100. And what might be a lot easier is if we simply set those plans as values in like a separate inputs area where each of these plans has a set price, like 100. And then in each of these cells, I wouldn't see the value 100. I'd see a reference to that cell. That also means that say we update, we're planning this startup that doesn't exist yet. So say we decide on different monthly plan prices because we're sitting down with an investor and they're like, that's silly, you should actually make this $300, it should be $1,000. For this model, the way it's set up, I have to type
I have to paste that $1,000 in every single cell. Instead, in a more dynamic model, I could just type in, okay, cool, 1,000 instead of 300, and it would automatically update all these values. So that could make things like a little bit simpler and a little easier to absorb feedback.
The next tab is our cost tab. So just to kind of quickly walk through what we're seeing here, I see that different costs are contemplated for the startup on a monthly basis. We're broken up into sort of some sections. So we've got all of these cost centers up at the top. These are all salary expenses. So these are all like people and positions for people that we're hiring. And then this little bottom section are all of the other costs, final third of the list. And then we've got sort of the totals at the bottom. So right into what I like about this. One, again, I love how clean and simple it is. That's like a common theme with Melissa's model, is it's very clean, it's very simple, and I don't get confused when I'm looking at it. And that is huge for a startup financial model. It's not easy to make things look simple. It's actually harder. And so it's a big accomplishment that it feels so intuitive and not crazy to look at. I love how these salary numbers are based on employee type. This is really cool how she's kind of sectioned out these different sort of employee centers. You know, we've got the executives, the sales people, marketing, customer service, combined total. I like that as like someone observing the model. It's also helpful because I can think about like, is she missing any departments? So that's really cool. And it's a good way to get really tactical on like, how many players do you need in each, right? Like you don't just need one developer, you need multiple, for example. So I like how that's broken out a lot. Okay, but what could we potentially do better here in this tab? Well, the first thing that comes to mind in terms of something that seems like it's missing is the cost to serve. So you could also, this is sort of like variable costs you'll hear. You might hear COGS, you might hear unit costs, but it's basically there's some kind of cost for most businesses for each incremental customer that you onboard, like a cost to supply your product to them. And this is B2B SaaS, so it's not always very high for B2B SaaS, but it's often there. For B2B SaaS, it is sometimes like the cloud, the compute cost of an additional user to the system. But it might possibly be true that for Melissa's company here, there isn't a cost to supply. But if for your startup, there is a cost to supply, say you're an AI startup and there's actually a significant cost for every additional customer that you serve and their like compute usage, then if there's no place to put cost of supply in this model, you might forget about it. So that's a place where you could get hung up and underestimate your cost. Also, just like in the previous tab, there are a lot of places here where things are hard-coded. It's hard to update benchmark assumptions. So for example, all of these costs for all of your expenses, your contractors, accounting services, benefits, these sorts of things, these could be dynamically calculated, but most of them are just static inputs over time, which makes it a little more challenging to update, especially if it's going to be like a lot of the same value over time. One more thing that's a little confusing to me in this cost projection is marketing budget, because I see in the first couple months of this business, there is no marketing budget. And on those same months for January, let's just quickly skip back to our revenue tab. In the same months for January, we're projecting a growth rate. So my question here is, where are these customers coming from? So marketing is a necessary expense for most startups. You need to pay money or spend time to get them to walk in the door. So it's important to put that cost in your model. And it also kind of harkens back and speaks to the problematic nature assuming a growth rate like we're doing here, because again, without marketing, like where is this coming from? A little nit here is around commission. So we're projecting commissions as 15% of salaries, but in fact, commissions are based on sales, not salaries. So if we're calculating those things
we should likely be looking at this revenue line in order to anticipate those costs. That said, I'm also noticing for the commission line item, we actually don't have any values for commissions. We're assuming there's no commissions. And so this formula isn't actually already in there. It should be if you're assuming that you're going to have a salesperson from day one. Final kind of tweak that I've noticed I'd make in this tab is around the benefits and bonuses. So a couple things about this line. One, it's 5%. Again, it's hard-coded. We talked about that when it came to churn, that it might be a better thing to have be dynamic so you can change it over the course of time. Also, 5% for benefits and bonuses. It might be a little bit low as a benchmark, depending on what you're offering for benefits for your company. And we don't have payroll tax, which is often included in kind of this like benefits, like burdening of salary costs. And so we should factor this in. It should be a bit higher.
And last tab, our summary view. So as you can see, all of the calculations we've made on the previous tabs result in yearly projections of our revenue and our costs and our resulting profit for the next 3 years. First, what I love that there's this simple yearly view of what we'll expect. I think it's really clean. It's really helpful to kind of see how the company is going to change year to year. I love that she's including corporate tax, a line item to contemplate corporate tax. If your company is going to be profitable, you need to anticipate paying corporate tax. It's going to have a huge impact on the cash you have in the bank. And a lot of startups don't think about tax. It's a huge expense. So really great that she put that in here. I love that in this summary view, we're thinking about things like lines of credit, of cash in the bank, of the cash remaining. Most times for your financial model, unless you're doing like a huge crazy pro forma, you tend not to need like a full-blown balance sheet in your projection, but you do definitely want to have some place where you're tracking the amount of cash that you have in the bank, the amount of credit that you can pull from so that you know if you're ever going to run out of that, because that's really important to know. And finally, I really love how simple the sourcing is of these formulas in this final view. Sometimes when you look at like the summary view in a model, it can be really confusing to see like, where the heck is this data coming from? But here it's really clear. All of the revenue stuff, it's coming from the revenue tab, from like the totals of each of these years. All the cost stuff is coming from the cost tab, from the totals of those years. And that's kind of it. There's nothing else crazy, nothing kind of like dynamically calculated on this page. Okay, that's it for my review of Melissa Kwan's fabulous model. Thank you so much to Melissa for sharing this template with the internet and for being comfortable with me reviewing it. If you haven't checked out eWebinar and your company does do webinars for onboarding or training, definitely check out Melissa's company. It's super cool. And I'll kind of wrap this video up by saying, this is my first one. What did you think? Was it boring? Was it helpful? Did it get too technical? Did I explain things correctly in this sort of weird video format? I'm really excited to do more of these, so please, any feedback, leave it in the comments below or message me directly. Let me know what you think, and in the next videos, I'll make sure to incorporate it so that they can be even more helpful. Thanks for listening. Bye. One last minute thought. I'm literally about to walk out the door, but I just realized I should ask, do you have a financial model that I should review? If you have a financial model that lives on the internet that you've tried using for your startup and you got confused, or if you have one that you created and you want it reviewed, but it doesn't have any proprietary information, any stuff that shouldn't be shared with the world, and you feel comfortable, I'll review it. So send those ideas to me and I'm happy to take a peek of those in the next round. Okay, now it's really done. See you next time.